If you'd like to hear some really interesting predictions for the crypto and blockchain market in 2025, then stick around. Welcome back to the Crypto Club and Digital Assets weekly catch-up on Zoom. Each week is completely different, where we have guests who talk about their project or just general chat. Topics covered include Bitcoin, Ethereum. We also talk about DeFi, NFTs, ICOs, STOs, TGs, all three-letter acronyms, really. Sometimes we may explore central bank digital currencies, regulation, stable coins, lots of things happening in that area. We also discuss things like the metaverse and the impact of VR, AR, MR, and the intersection of artificial intelligence. So it's all really fascinating stuff. So with that, let's see who's going to come and join us today. Hey, JT, Happy New Year. Gabriella, Happy New Year. Background noise, yeah.
Wow, okay. It was on CNN.
Are they talking about crypto on CNN?
No, not yet.
Not
Yet, you guys.
Not yet, but it might be in a couple of weeks' time, perhaps. Well, welcome back, JT. Anyway,
Yeah.
Happy New Year to you. And Gabriella's joined as well. Hey, Gabriella, Happy New Year.
Happy New Year. I have a question. Just maybe both could help me. Okay, I'm taking advantage that JT as well. If I'm correct, he has a lot of knowledge about IT. Okay, and I would like, okay, and given the space, the pace of innovation in blockchain and crypto, and nowadays everybody is speaking about Bitcoin, and how can someone outside of IT ensure that they stay relevant and contribute to this ecosystem?
Mm-hmm. The short answer is that they should come along to events like this each week and learn and contribute.
Yes, yes, okay. I'm still learning, and I think that everyone should learn by themselves.
Mm-hmm.
But if you are not an expert on IT, how much better focus that way?
So I'll offer a quick viewpoint, which is that there are so many resources available now.
Exactly. That's the thing, how you can focus and avoid how to just focus and go to the main point.
Okay. So my suggestion is that it's always worthwhile going back to some of the first principles. So it's always worthwhile for anyone who's got an interest in cryptocurrency in general and what it was originally intended for and that kind of thing. I always suggest to people to take a look at the original Bitcoin white paper, which is not a very big paper. It's like I think it's a dozen pages or something. And it actually goes into the details of peer-to-peer electronic transfer of value, the problems it's trying to solve, how it works. It's an incredibly well-written paper to cover so much at such a fundamental level, in quite basic terms. And then maybe take a look at some of the books that have been written. Andreas Antonopoulos wrote a really good book about Bitcoin and how all that works. Check out YouTube. There's loads of videos these days.
Okay, but I mean, my question is about, okay, maybe more focus on how to use certain applications. How works special payments with credit cards with this application?
So my quick thinking is that,
for example, how come you can buy a real estate? How you can buy you can pay a trip using cryptos? How it works?
So my thinking is that most of the people I know who are buying things with crypto, they're using payment cards where you don't even realize it's crypto. So it's kind of pseudo crypto in a way that it uses crypto as an intermediary to do the currency transfers, but it's not quite true crypto. So I know a few people who've got kind of credit card type things or payment cards, that do the transfers. But I don't actually know that many people who truly use crypto for payments. There are some. I mean, JT, you've got my exposure in the Middle East and that, where crypto is more widely adopted. Are you seeing anyone using any particular capabilities or anything to make payments?
Yes. So there is quite a few around. Yeah. One of them, if I'm not mistaken, is called BitPay. There's several of them. Yeah. On top of my head, I'm sorry, it's
Yeah.
weekend. I've been enjoying the weekend, so I can't remember all of them. But some of them you can just go and without having a card, you can actually pay for it. It just scans the QR code. Yeah. And that's it. You pay for it. So one of the another way is like you said, is attached to a card. So there are services, and even a lot of the exchanges have those cards. Yeah, they are basically Visa cards and Master cards, and they they are attached to a wallet or several wallets that you have in your account. So uh, it automatically when you pay with your Visa card, it is really a debit card, yeah, and it actually takes straight away from your wallet the amount. It does the conversion automatically and so on, yeah. But then there are others. There are others a bit more, how should I say, not sophisticated. In the Middle East, in several countries, you can actually buy properties with it. You just
Yes. Uh-huh.
Yes, I mean, there in Dubai, it's known that people are, it is accepted now, crypto payments, yeah, for goods. And you can buy directly from anyone who accepts Bitcoin, that is selling properties, for example.
And
So
you
there's
can
several countries already doing that, yeah.
buy goods or whatever with your crypto wallet directly.
Yes, so with your crypto wallet directly, only if they accept transfer from your wallet to them, yeah? Then you have to do the transfer from your wallet to them. Other people have kind of remove all of that pain from people who don't understand crypto and technology, and provide services where just with a simple QR code that is attached to your account, you pay directly for the service. They need to accept that QR code, of course, when you're doing the payment.
Exactly. So you can pay as well without your bank account.
Yes.
Okay. Okay.
And as JC says, you got things like BitPay. Visa is still doing some work into doing payments and that. Coinbase, you got here. I've just pulled it up now. Coinbase card, where you download an app and you use
Yeah.
your crypto
And
wallet
there
to
is
make
there is
payments.
yes, there is crypto.com, there is Nexo, there is Wirex, I think is the name.
Hmm.
There's I know quite a few. Even Binance has Binance Card. So there's a lot of service now, and I think Nexo as well is another one. Nexo, if I'm not mistaken.
And related to security, privacy, and trustworthiness, how it works.
Well, that's why we need to choose some of the services that are well known. Yeah. If you
Mm-hmm.
go to anyone that advertises, you can get scammed, you can get into so many problems, So going for the ones that are known, Nexo is known. Uh, can they blow up? Yes, of course they can, That's why, not just Nexo, I'm talking about any other company that is not really big in crypto, like Coinbase or Binance and so on,
Mm-hmm.
uh, you know, or crypto.com. So there's quite a few established ones. There are others that are supposed to be established, and I gave some of the names. I can't go through all of them, and I think if you do a research, you'll find them very quickly, But on top of my head, those are the ones that I know of, but there's lots of them, You just need to do a research. In the UK, I think we have already 4 or 5, isn't it? But that the FCA kind of authorized, yeah, for crypto payments. If I'm not mistaken, Gary.
Yeah, I think you're right. The challenges, I think one or two of them might be withdrawing But yeah, there are certainly registered companies who are on the UK FCA register for crypto assets, and they're certainly worth looking at. Gabrielle is fortunate that with her being in mainland Europe, and she doesn't have to worry about the UK FCA.
Yes, in Europe and Spain, but I'm would like to know as well if there is something where you can buy or worldwide with Coinbase card. You could. It is possible.
I believe so.
Okay.
I was checking on the. I mean, again, it's easiest just to go away, check out what it says on the website.
Okay.
But I believe Coinbase card does allow you to make payments actually in crypto.
Because, for example, if I am correct, Bukele is going to set a Bitcoin bank in El Salvador. That's correct.
Who? Sorry.
Bukele, the president of El Salvador.
Okay.
Bukele. Yes, is going to set a Bitcoin bank in El Salvador.
Okay. I know El Salvador is very
Yes.
in favor of crypto and that kind of thing. I didn't know about them actually setting up a bank.
Is one of the last news I saw about El Salvador, because now El Salvador and now is looking for some agreement with Argentina as well, is going to buy
Okay.
a lot of Bitcoin and
because it's kind of interesting that there was an announcement a while ago around El Salvador.
Exactly. Yes. I think
However, I'll just share something in a moment. There were two things that came up about El Salvador recently. One, and I'll show it now, which is exactly as you say about them setting up a bank. And this was back in June of
it could be
2024.
just a news. It's not something. There is a lot of projects on mine.
Yeah. But I'm conscious that in December, I think El Salvador, here we go, agrees with the International Monetary Fund to confine.
IMF. Yeah, there is another. They are negotiating as well. The IMF.
Okay.
Want isn't yes.
Yeah. So this is one of the things that I think the IMF is encouraging El Salvador to not go too far into crypto. And they can kind of apply pressure by refusing loans or limiting loans, which looks exactly what they said. And this is just a few weeks ago. The IMF agreed an extended fund facility, so a loan with El Salvador.
This is another topic, very important topic. So, what do you think about it when is a country that adopted Bitcoin 100%, and now
so
maybe
that's probably something worth discussing a bit further. So if we're looking in terms of like predictions for 2025, and one of them is certainly around mainstream adoption of crypto around the world, or more specifically adoption in certain countries. And El Salvador's always been, or the presidents of El Salvador's always very crypto friendly. But it comes down to the whole thing that you can claim to be crypto friendly, and then if your country is in some way linked to something like the IMF or the World Bank, or is constrained by regulations around the world or whatever, then pressure can be applied to not go down that route. And I think we're seeing a little bit of that at the moment with the IMF. So how that plays out through the year, I don't know. Just been joined by Elena and Annie, but I wanted to pick Annie's thoughts on this really. That, where do you think this is going at the moment? Because you've got an interest in regulation and that kind of thing, I seem to remember.
Yes, I think from your discussion, I hope I haven't missed too much, coming in 6 minutes late. I'm curious as to what, you know how with banks, if they shut down, let's say our bank account has up to 80,000 and we will get the money back, right? So is that similar for Bitcoin then? If they shut down, would we get anything back?
Okay. So I know a little bit about this. So in the UK, there is a scheme which is called FSCS, which is the Financial Services Compensation Scheme. And that's where if a bank closes, the funds of the customer are protected for up to the first £80,000 worth of funds. And a lot of people don't actually understand what that's for. And it's kind of interesting straight away. I know only Elena and Annie, you're good enough to have your cameras on at the moment, but I'm going to do a quick experiment. Do either of you, and you don't have to say how much, do either of you have any of your money in a bank account? Put your hand up if you do.
Yes, have money in bank account, yes.
Okay.
I think that is probably quite normal.
Okay. It's actually not. It's very unusual because most people think they have their money in a bank account, but they don't. And I suspect this will apply to you as well.
It is in their bank account. It's not theirs.
Correct. Correct. So when you deposit money into a bank account, it ceases to be your property. Okay. And a lot of people don't realize this. And this is why people always talk about having my money in a bank account. It's not your money. Okay. And this is why I say it's actually unusual. The only exception to that is there are a few private banks who offer escrow services, which is where if you deposit your funds, it's like sticking it in a safety deposit box. Okay, it really is yours. So for most people, when you deposit your money into a bank account, you are actually issuing the bank with a loan. And the thing about a loan,
promissory note, isn't it?
That's correct. So that money becomes owned by the bank. Okay.
Yes.
And a lot of people don't realize this. Okay. And so this is why the FSCS exists. And this is why it's a compensation scheme, not a refund scheme. That if the bank goes bust, the way it works in the UK is if any company goes bankrupt and it becomes insolvent, the first entity to receive any money back from the liquidation of access is the tax authority. So in the UK, it's HMRC. So if you're somebody who is what is known as an unsecured creditor, then there is no guarantee that you'll get your money back. Now, when you think about that from a customer putting money into a bank account, that does not sound very good, does it? You're carrying the risk that you're handing your money over and you might lose it if the bank goes bust. And that's why the FSCS exists, to effectively provide a form of insurance. It's not insurance, but it's similar to it. And in fact, in the USA does actually use an insurance scheme. The letters of which escape me at the moment, but the banks in the US have an insurance scheme whereby if the bank goes under, then they get compensated. So, sorry, my camera keeps dropping off at the moment. So this is the thing about where you say, oh, well, is my money protected if I've got crypto? First of all, cryptocurrency is not a financially regulated instrument. So in the UK, it does not fall within the UK FSCS scheme. And it's the same with any European schemes that are in place as well. So if you had your money in the equivalent of a crypto bank, so in reality, an exchange. So, say Kraken, Coinbase, Binance, whatever. If any of those went bust, then you are an unsecured creditor. And that is why it's always better that if you're buying and selling crypto, take your money off the exchange and own the private keys yourself. So that way, it doesn't matter what happens to the exchanges. So this is the thing that, in a way, it sounds risky that you haven't got this protection. However, in crypto, there's no need for that protection, because if the exchange goes bust, you've got the money. So it's almost like you're having cash. It doesn't matter if a bank goes bust; the cash is still yours. Same with crypto. Does that make sense, Annie?
Oh, I see what you mean. So it doesn't. So the crypto doesn't then belongs to the company that you put it with. It's still
If you hold the private keys yourself, if you have a crypto wallet and you secure the keys to the crypto in your wallet, then yes, you own it. And this is why there's a saying that goes through the whole crypto community: not your keys, not your crypto. So if you've got funds in, Coinbase, Binance, Kraken, any of the exchanges, if your money is sitting on the exchange, sorry, if your crypto is sitting on the exchange, then there is a risk you could lose it. And that's why what you should always do is transfer it off the exchange and stick it into a private wallet, into a cold wallet or an offline storage, your own wallet, basically.
so
Okay.
basically I would still have access to it if the crypto company went bust. Okay.
Correct.
Now the thing about the bank, why it is not although I knew that the bank actually takes the money and then they invest it somewhere. That's how I earn an interest every month. Although I knew that, why is it I didn't think that it then belongs to the bank is because if I decided tomorrow I want to close my bank account with this bank,
Yep.
and I would transfer all that money out to another bank, and they can just transfer it.
They can, but they won't.
I haven't experienced anything difficult with that one. If I wanted to do that,
Try it one day with more than £5,000, and you will find it surprisingly difficult.
I've tried with 20K,
Yeah.
pay my mortgage, but
Okay. Yeah.
not
So
seeing a difficulty with that one.
if you've tried it recently, it's definitely getting harder and harder.
Oh, it wasn't recent. Okay.
Okay, right. So, certainly recently, it's getting harder and harder, and the banks are reducing all the time the limit to how much of your money they will let you have back, because it's not your money. So all they're basically saying is how much they're willing to repay of the loan that you have given them. So you could, and I get this all the time. I get people who are very frustrated who say, oh, well, I wanted to go and buy something the other day and I wanted £10,000 in cash or whatever, went into the bank, and the bank insisted on me answering all sorts of questions about what I was using it for, then told me I had to come back tomorrow, blah, 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 blah type thing. And everyone keeps saying, how can the banks do this when it's my money? And it's because they don't realize it's not their money. This is the thing.
Interesting. I've never, maybe because I haven't done it recently. That might be why I haven't experienced it. Although I have seen messages somewhere where people were saying that the banks is checking very hard if the money is used for transacting for Bitcoin. And I thought that might be a reason as to why then the huge amount of money becomes a trouble. But I didn't realize outside of Bitcoin, even if you wanted to purchase something and that something cost 10K for some reason, and I didn't realize that would have a big problem.
Yeah. The numbers as to how easily you can get access to the money you've loaned to the bank, the numbers are definitely dropping and dropping. I've certainly had it where, if you buy or sell a house, that's a classic thing where that generally involves quite a large sum of money.
Yeah.
And it's fascinating if you deposit that money with a bank and then try and withdraw it.
Yeah.
It's almost impossible to do with any large sum of money these days.
Really?
Yeah, it can be very, very challenging. So
things have changed.
Yeah, and it's getting harder and harder. And then you do things like, say you want to withdraw £10,000 because you're going to Las Vegas and you want to play the casinos. If you tell the bank, I intend to spend £10,000 on going to a casino where there's a risk that I'm going to stick this all on black and I could lose it instantly, they'll say, yep, fine, thanks for letting us know. We've done all of our checks, which is to make sure that you're not being fleece scammed, blah, 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 blah. Okay. If instead you say, I'm going to use that £10,000 to buy Bitcoin or Ethereum or anything else or whatever, there's a good chance they'll try and block that transaction. And each bank is different, and each bank every month seems to change its opinion. And they will say, oh, no, well, crypto is a very high risk. It's like, well, not as high risk as putting all your money on black or red, and you'll allow me to do that. But they get very, very antsy about it. So you will find that they will insist on having a reason, first of all. And you get it both ways as well. If you suddenly deposit 50K into your bank account, they will generally get in touch with you and say, where has this come from? Because they like to check what's known as source of funds. So that they're protecting themselves because they don't want to handle money that may have been gained illicitly. Now, that £50,000, again, it might be that you had a great time in either Macau or Vegas or whatever. You went to a casino, you put that money on and you won it, and that was quite legitimate, and they'll typically accept that. If you say something like, oh, I made £50,000 because I bought Bitcoin when it was $1,000 and it's now $90,000, blah, 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 then that might cause problems. And they're quite challenging, quite bizarre. So this is why I say to people who, if you're trading in crypto or you're involving in crypto in any way, it can be advisable to have several bank accounts these days, simply because you may find there are occasions when your bank might get a little bit concerned that with crypto, they're not actually worried about you. They're actually worried that the crypto may have at some point in its journey been involved in some illegal activity, and it's traceable, and that exposes them. And that's all they're really interested in. What they'll say, though, is it's to protect you. Quite often you'll find it's the opposite of what they claim. So
I see. Okay.
And this is where it's going to be interesting. One of the things I was hoping to discuss today was, what we think is going to change in 2025. And up till now, all I've seen in the UK is increasing regulation around crypto and increasing controls and increasing limits. And it's possible that we may see a change around that in 2025 as the UK government realizes actually crypto is not going away and might actually be a good opportunity to provide innovation, stimulate the economy, and so on. So they might actually encourage the regulators to be a bit more flexible. But I'm not so sure. If you take a look at elsewhere around the world, JT and I were mentioning before, so you've got the US upcoming new president being introduced this year, who has already said he's quite crypto friendly. So you may find that he is supportive of a crypto friendly environment, which that might then necessarily cascade off into other countries for fear of missing out. The United Arab Emirates in particular seems to be very crypto friendly. But Abu Dhabi and Dubai in particular, they've introduced regulations. They've got a thing called VAR, which is the Virtual Assets Regulatory Authority, but very crypto supportive. It's possible that other countries might start becoming more crypto friendly as well. Or they might not. They might see it as a threat or a risk, which is why some countries are already introducing rules around what are known as stable coins. So stable coins are cryptocurrencies that are pegged against something else, and that something else might be a fiat currency. And so the theory is if you've got something like Tether, which is USDT, or there's another stablecoin USDC. In theory, for every dollar of Tether, there is a US dollar on deposit or equivalent to it. Now, the reason that governments and central banks start getting quite worried about that is if you've now got a crypto asset that represents the equivalent of a traditional currency, then that then reduces the control that the central bank has over the currency. And so there've been some nervousness around stable coins, and there are regulations being introduced for those. And then we've got a thing called CBDCs, central bank digital currencies, which is where you've got central banks that are looking to issue things that kind of behave like cryptocurrencies but aren't cryptocurrencies. But for all intents and purposes, that they'll behave pretty similarly. You'll have a wallet on your mobile phone, and you can use it to buy and sell things. And they're already trialing that quite extensively in China, in India. There's been a few failed projects. In Nigeria, there was the e-Naira, which I don't think has gone very well. We mentioned El Salvador before. I think they were trying some things. There's a few other countries as well. So CBDCs, I think, are something that in 2025, we're going to see some projects switching from pilot mode to production mode. And that may have an impact on crypto, because CBDCs kind of look like crypto, behave like crypto. Mm-hmm. And so most people will think of them as crypto. And therefore, if banks are supporting CBDCs, people might assume that means that banks are supporting crypto as well. So it's kind of like what's known as a halo effect, that the crypto will benefit from the adoption of CBDCs.
Okay, that leads to my next question. Thank you very much, Gary. So let you have a sip of water. My next question is then, so with the regulations that is coming up because of the interest, does that mean it might sacrifice some of the decentralization that is what crypto is meant to achieve?
I think JT and I may have had a conversation with a few others about this recently, about just how decentralized or not crypto actually is at the moment. So again, it was interesting, right at the beginning, Gabriella was asking about how can you learn about crypto and all this kind of thing. And I recommend go and read the original Satoshi Nakamoto white paper on the Bitcoin protocol. And it talks all about the equivalence of electronic cash. It talks about peer-to-peer payments with no intermediary. And this is where I think Bitcoin is kind of an experiment in decentralized value transfer. And it's a brilliant experiment, but I would still argue that it's still an experiment. One of the things about experiments is that you can use them to prove or disprove things. Mm-hmm. And I think one of the ambitions of Bitcoin as an experiment was to prove decentralization. And to date, I think it's managed to successfully disprove it as an effective thing. So if you look about how do you typically engage with buying or selling Bitcoin, you go via an exchange. What's an exchange? Well, you take a look at the big ones, whether it's Coinbase, Kraken, Binance, blah, blah, blah. They're all pretty centralized. They're centralized in their structure and they're centralized in their governance. And this is something that a lot of people don't realize. When you're talking about decentralization does not mean physically distributed. That is distributed. So Bitcoin as a network and as a protocol is definitely distributed. You can argue about how well it's distributed, if the mining is mainly in China or Russia or whatever, that's one thing. But when we talk decentralization, we're talking about the governance, i.e. who controls it. And Bitcoin, as an example, is heavily influenced by the exchanges and the miners. So you could argue it's not actually decentralized. For the end user, do they even realize that? Probably not. But if you're going via what's known as a CEX, so a CEX, a centralized exchange, by the very nature it's called a centralized exchange, it's not decentralized. And this is why some people, and maybe Ken will want to come in on this, this is where people are talking about using what are called DEXs, which are decentralized exchanges, which hopefully introduce more decentralization. Ken, I don't know, what's your thinking on crypto in general and centralization and decentralization?
Yeah, I mean, hi. Well, my thoughts that with Bitcoin, really, most of it is centralized. I'd say about 99%. Because if the only way most people can buy it is going through a centralized exchange. There's no decentralized exchanges that actually do deal with Bitcoin. What they do have is a wrapped Bitcoin, which essentially means that somebody holds the Bitcoin in a centralized wallet and they've got the keys to that wallet and issue maybe a token on, for example, on Ethereum, W BTC, which is basically wrapped Bitcoin, and you've got that token, and you can buy that, and if you want it, you can sell it, or if you want to basically get your Bitcoin back, you have to send it back to the person who holds the key. Then they have to accept it and say, okay, we'll give you the Bitcoin or not. So with Bitcoin, there used to be peer-to-peer ways of buying Bitcoin, but a lot of it doesn't have a lot of volume. Most people just like the ease of being able to sit in their office or at home or whatever and just buy it through a centralized exchange. And most of, I think, yeah, with Bitcoin, I think most of it is traded centrally at the moment. Whereas with things on other things like on maybe Ethereum and Solana, because you've got smart contracts that allows for decentralized exchanges to come up, and therefore that allows for a lot of trading activities to happen in a decentralized manner. So you actually keep hold of your keys. But as things are going, more and more people are, I say the vast majority of users use centralized exchanges. Just have to look Binance, Coinbase, crypto.com, Kraken, the list goes on. The top exchanges are actually centralized exchanges.
Yeah. And just as Ken was talking about that, just popped up on screen the main decentralized exchanges. You take a look like Radium, but certainly Uniswap is well known, and Curve, I think, is another one, and PancakeSwap. These are all well known decentralized exchanges, but the volumes of them is compared to traditional centralized exchanges is somewhat smaller. I mean, saying here, what's this total DEX trading volume is 6 billion in the last 24 hours. I'll go and check in a minute what the centralized exchange trading volume is, but I suspect it'll be somewhat bigger than that.
Yeah, it will be much bigger. As well as that, it's you can't really do what it's very hard basically to do washing on decentralized exchanges. Washing basically means you're buying and selling by yourself. So there's where centralized exchanges are notorious for doing that. Whereas in decentralized exchange, every time you buy or sell, you have to pay a transaction fee. So it pretty much eliminates the washing mechanisms. And not only that, you push the price up against yourself if you're buying or down if you're selling. So it's a harder thing to do. But if you own both sides of the bid and the ask basically of the buying and selling, you can do a whole load of wash exchanging. And that still is, I think, a big issue within some of the centralized crypto exchanges.
I thought that there's quite a few. I think one that came out of just my mind when you were saying about centralized Bitcoin. I don't know if you came across kind of BISC, BISQ. I think it's called BISC network. It's a peer-to-peer network, decentralized exchange. And I'm pretty sure you can do, or they were planning to do, not sure if they went across. Let me have a look. They Bitcoin for fiat and fiat for Bitcoin through peer-to-peer network, no identity verification, all of that stuff they were planning. So I'm not sure how far they are. Let me have a look.
There you go. I've just pulled up BISC at the moment.
Okay.
Yeah, decentralized exchange.
Yeah.
Yeah.
Well, they are BISC2 beta. It looks like from the menu. I can see it.
Okay. Yeah.
So there's a few popping up, Ken, but you were right, I think that was the hardest part on Bitcoin, was the ramp on and ramp off.
Yeah, that's one of the things. I mean, I haven't really. I mean, I used to use it when you had those peer-to-peer in the olden days because centralized exchanges were just pretty much really bad. Then you get better odds on those. But ever since the centralized exchanges have come up, they've pretty much taken up a lot of the volume because of the ease. You know, it's easy and they've got liquidity, all that kind of thing. But yeah, I mean, like I said, I'd never heard of this, but I'll check it out and have a look.
The other thing to be aware of as well, particularly for Annie's benefit, if she's not aware, or anyone else who's interested, sometimes people say, well, what's the difference between a centralized exchange and a decentralized exchange? And it comes down to the whole governance model that they use, that a centralized exchange, by its very nature, is controlled by an organization and will typically be aligned with regulation in some way. So this is why, if you take a look at Kraken, Binance, or all the major exchanges now, they all actively perform anti-money laundering checks, KYC type stuff, because they've got an obligation now under things like MiCA, so marketing cryptocurrency assets, to actually track and make sure that any funds coming through, just like we were saying earlier on about how banks, if you deposit money in a bank, they've got an obligation to check where that money came from or where the money's going to. There's kind of some similarities in crypto now. And so the centralized exchanges all do KYC checks. So this is why if you want to register for an account on any of the major exchanges, you need to provide details of your identity, proof of who you are and everything like that. Whereas decentralized exchanges, because they're not geographically based in a single jurisdiction, may consider themselves to not be obliged to follow the same regulation, shall we say, which means that it's possible to register with a decentralized exchange and not go through a KYC process. So the big selling point on that, and again, I'll always have this is not financial advice, regulatory advice, or criminal advice, is that if you don't want people to know, and by people I mean government departments or agencies or whatever, that you are taking part in a crypto activity, then you don't want to have to provide evidence of who you are. And so some decentralized exchanges might allow you to register an account without proving who you are. And that then allows you to buy and sell crypto kind of anonymously. And I say kind of because it's still not 100%. So
yeah, it's not really anonymous. You've got your IP. They can track your IP address and track you down by that. That's how they got these guys in New York who stole those bitcoins and so forth. That's how they got the guy from Silk Road. He went to I think a library, put his laptop and his VPN dropped off, and that's why VPNs now have that issue where instead of dropping off, it will just cut you off the internet. His VPN dropped off, then he was able to leak his actual IP address, and then they were able to basically use that to find out roughly where he is and then track him down. But that's not really the main issue. The main issue, if you look at the
that was a rookie mistake, wasn't it?
yeah. But the thing about decentralized and centralized exchanges, you have really to refer back to the Bitcoin white paper. In the Bitcoin white paper written by Satoshi, he clearly says Bitcoin was invented to get rid of middlemen, and then he goes on to explain banks. And he basically says, when you give your money to the bank, it's not your money. That's why people can't get it. That's why you can go to the bank and they'll say, well, we're not giving you your money, and there's nothing you can do about it because technically you give your money to the bank. But with decentralized exchanges, you own your crypto. So when you put the crypto, let's say you're on Uniswap and you go there and you either want to sell or buy or whatever, you own your private key, which means nobody can come and take that crypto off you. So what happens is the element is who owns the crypto. If you take your crypto, the minute you transfer it to a centralized entity, they own it. In the olden days, a lot of us suffered from this because the crypto exchanges decentralized ones had really bad security, and they were just getting hacked all the time. and people were just going crazy, losing their money, and just like, absolutely going crazy. But I have to say, the centralized exchanges security have got much better, much better ever since. But that's the main thing. Once you put your crypto to them, you got to know 100% they own it, and they can keep it. You just have to look at the Celsius judgment. The judge in that, when a whole load of crypto people who had their crypto in Celsius, when it went bankrupt, wrote to the judge and say they wanted their tokens back in tokens and not to be sold and turned into fiat currency and sent back. But the judge said no. As soon as they transferred it to Celsius, it was the property of Celsius, and now it's part of the Celsius estate. So, I mean, they sold everything. I mean, they really did it the wrong way around. They sold a lot of crypto during the down market, and then they bought Bitcoin and Ethereum, which they're going to transfer back to people during the up market. So people lost during the sale, they lost so they really did it completely wrong. On the other hand, if you look at FTX, they're going through the same process, and I think the judge ruled the same, saying, look, all the crypto in FTX belongs to the estate. And, they're just going through the same playbook. They're actually selling a lot of the crypto. But because FTX went down, was bankrupt during the down market, the bear market, and the crypto they're holding has been going up. So when they sell it, potentially people are going to get back the same amount, or even, pretty much the same amount or slightly more than the valuation of their crypto on the day that FTX went down. It's just how crypto works. But again, you've got I think a whole lot of them ganging together and trying to force the judge to stop FTX selling some of their tokens so that they can return it back to them in tokens, because they want to hold it long term. But I don't think that will happen, because you've already got precedents which were set by the Celsius thing, and a lot of the Celsius people are running around patting themselves on the back on how they did such a good job and so forth. And you would pat yourself back if your firm collected 300 million from Celsius. So I think that's the main issue. The main thing we have within crypto is simple. It's as soon as you transfer it to an exchange, you don't own it. But if it's a decentralized exchange, you still own it. There's still other ways you can lose it, because obviously you will not lose it, but people can basically dump the market and so forth, and you can lose value. But the actual token, you own it. You own the private key, and that's that's why the saying goes, not your keys, not your Bitcoin or crypto, something like that. But yeah, so it goes back to that initial reason why Bitcoin was invented. It was actually invented to get rid of middlemen, and that's what Satoshi's mission was, and he clearly explains it in his white paper.
It is worthwhile checking out the white paper. I've just pulled it up here as well. And, the second paragraph, what is needed is an electronic payment system based on cryptographic proof instead of trust. But more importantly, it's where it then says, allowing any two willing parties to transact directly with each other without the need for a trusted third party. And that's the whole thing. So it means, Annie, you and I could transact directly without an intermediary. And that means we've reduced the risk, therefore, of us both using an intermediary who goes bust. So that goes back to your very original point about, in the UK, you've got the Financial Services Compensation Scheme. That is to reduce the risk of you losing money if the intermediary goes bust in some way. And this is why most people don't understand why the FSCS exists. And it's simply because if that protection wasn't in place, people wouldn't be so willing to deposit their money in bank accounts where they can't get their money back. And a lot of them don't realize it's not their money at the point at which they hand it over. The clue is in the word as well. Deposit. You think about in the English, deposit comes from the word depose, which is to lose, to die off type thing. So really interesting stuff. But a lot of people will accuse you of being, oh, that's a load of rubbish. And I had it a while ago. I was on a panel at a crypto event a while back where I did that same experiment that we did before that. So put your hand up if you've got any of your money in a bank account. And everyone's hands went up, and I told them the actuality. And they were all kind of like, no, you're talking rubbish. And it was really funny because there was another person who was on the panel with me, and he leant forwards and he said, excuse me. He said, I've got a license to operate my own private bank in the Isle of Man. And what Gary says is exactly correct. So he said, I agree. So
this usually comes to light when you have a bank sort of go down. I mean, in the UK, I think the last one was BlackRock. Was it BlackRock? When everybody was queuing around the corner and their doors were closed. And in the US, I mean, I remember when the Silicon Valley Bank went down, and all these startups, they had millions, they'd raised millions, stuck it in there. Suddenly they can't do payroll, they can't do anything. So the government over the weekend pretty much came back and did a deal with somebody and so forth to allow them to keep operating. Because technically, in the US, I think you only insured up to 250,000. In the UK, I think it's 85,000 pounds, something like that. So anything over that can just disappear, basically.
Yeah. In the US, they've got a slightly different model. It's called FDIC, and it is an insurance type capability. And you've got this, it's called Federal Deposit Insurance Corporation. So it's an organization that exists, and this is where the banks have to hold funds there. And it means if a US bank goes bust, it's FDIC that pays out. And this is where it was really interesting a while ago. As Ken says, we had Silicon Valley Bank that had problems. There were some other banks going under as well. And at the time, there was a question raised of, did FDIC hold enough reserves in order to pay out if all of the banks started going bust? And unless you're in the US, you may not realize that banks are typically still state-based. So you might have like New York Bank, California Bank, or whatever. And so they're still run through state regulation and not just federal regulation. And this is where you get things like Silicon Valley Bank, obviously being like California and that kind of thing, had a slightly different perspective. But what was announced was that if enough banks went bust, FDIC would only protect the investments in the banks in the systemically important banks. Okay, now that kind of sends a bit of a shockwave, because what that translates to is if you had your money in what is known as a mama and papa bank, so like a relatively small state bank, then you could potentially lose your money. Whereas if you had your money with somebody like JP Morgan, obviously they are a massive entity who, if they went bust, it would have a systemic impact on the banking system, then they would be protected. And that nearly caused a bit of a run on the banks about a year or so ago in the States, where everyone started saying, well, hang on. What you're saying is that if my money is deposited with a big bank like JP Morgan, then it's protected through FDIC. Whereas if it's with a small bank, I might lose all my money. So the natural thing to do is to take your money out of the small bank and put it with the big bank, which then put more pressure on the small banks because then they were losing their deposits. So it was an interesting situation to be in. So yeah, it's interesting how I realized that learning more about crypto forces you to learn more about the fiat traditional finance world. And this is where you discover that sometimes how you think works isn't. And a bank account is a good example of that. So anyway, so you got quite a comprehensive exploration there. I just want to keep the pace going the last few minutes. Any other thoughts from people about 2025?
Yeah, I've seen a few things at the end and the beginning.
Yep.
And it's like, I don't know if you heard of Virtuals protocol.
No.
Yeah, virtuals.io. So
Okay.
he reached very quickly 4 billion market cap. It went insane. So it's all about people creating their own AI agents, you know. But the majority, I think we had a conversation here before, you know, majority of all of these AI agents are not really AI, you know.
Yep.
They just wrap ChatGPT, they wrap, you know, some stuff around the Mid-Journey APIs and all of that stuff, you know, and then they call them AI agents and everybody starts to launch their AI agent and they all pumping and people, of course, traders make lots of money. Everybody joins in and then they start to launch some meme coins that they call AI agents and the majority that I look, I mean, I'm talking about 99, more than 99%, they don't have really any proper AI behind, you know, they're just reusing whatever it's out there, which is okay, but it's the way that it's been abused again, you know, again and over again. And this is quite interesting because it takes us then to meme coins, you know. So now people
Hmm.
launching meme coins, they call them AI agents and meme coins. When you look at it, there's nothing really as an AI agent, yeah. It's just experiments. And then people come and start to launch, they launch a few meme coins recently. And they're quite interesting, some of them, but they are not calling them AI agents and they are going very fast. Like, but what worries me is that they might not have an IP of those, yeah? Like it was done with Pepe. Nobody had the IP of that. It's a well-known author, you know, of Pepe, and they launched a Pepe. I don't know what is the situation with lawyers and them, but I heard a while back there was some legal things going on, and now it's Kiki. You know, Kiki the cat have reached is going really fast. I think 700 million market cap as well. Uh, uh, and today I heard that this baby shark went in 2 days, gave a 10x to people, you know, going from 30 million to 300 million market cap. So people are really still doing the same things, you know, as last year. It's a continuation, basically, you know.
There's definitely a fish connection, isn't there? Because you get things like pudgy penguins, um, and there was the other one. What was the one a while ago? Sushi Swap, and
Yeah, but that was a DEX, yeah.
yeah, yeah.
But you know, there's Baby Shark. I think is the last one that people are all jumping in, and I keep telling people just be careful. You know, if it's already at that value, you know, it might go the other way around. Who knows? You know.
Yeah. Well, I
It's
think
still the same things, you know. People jumping on this key virtual protocol. Everybody launching their own AI agent, their own coin. You know, I'm like, oh my God.
I think you're right, but again, it's all about these kind of trends, and a lot of them are just hyped up. And when you actually take a step back, I mean, here's the price chart on, as JC says, Baby Shark. Anything that does this, where
I'm
it
not sure if
goes,
that's the one. Okay.
no, is that
No,
not? Because
no.
because that one to me, you know, when you get this kind of leap here, unless it was only launched or
I'm not sure
something.
if that's the one, but might be. Mm.
Yeah, see, that looks as though it's a pump, and potentially there's going to be a dump on that in some way. Um, Anything that suddenly rockets either means that there wasn't the liquidity or the volume, and it's just grown. But you look at this, you may be right actually, because trading volume $600, that doesn't seem right. So maybe it is a different one. So, but yeah, things to watch out for. Definitely. Elena, I wanted to quickly bring you in at the end, unfortunately. Any thoughts about the metaverse for 2025? Is this going to be the year of the metaverse, do you think?
Yes, of course it will be.
Correct
Yes, of
answer.
course. Yeah.
And have you
No,
got?
we will discover as we go along. And but I'm very happy. I have my 1 minute Yeah, just wanted to say thank you for all the participants. I really enjoyed listening to your conversation. And Gary, you mentioned that the more you learn about crypto, the more you find out about fiat.
Mhm.
That's exactly about me. If I were not interested in cryptocurrencies, I would know nothing about fiat.
Mm.
So yeah, and the last thing about AI, Gary, you mentioned Notebook LM
Mhm.
in the very, very end of last session, last week. So Notebook LM has been my best friend and companion ever since. So maybe next time we might speak about that more and what more options and possibilities
Yeah.
AI assistants like this open up for us.
Definitely, and we're going to have to finish now, but that's a really interesting thing to close on. That if anyone doesn't know about it, do check out Google's currently experimental AI capability, which is Notebook LM, which allows you to basically get it to load PDF documents, for example, or Word documents, and then you can interact with it, you can question it, but you can get it to write a podcast. So it'll actually do a two-way conversation, and they just released an enhancement to it a couple of weeks ago, where you can now do a three-way conversation where you join in the conversation. And if anyone doesn't understand what that means, go and check out notepad.lm on Google. Notebook LM on Google, and just go and try it. It's free to try out. And yeah, that shows the future of AI and seems quite interesting.
So it's better than ChatGPT then.
It's a variation. I mean, all of these things, whether it's ChatGPT, whether it's Gemini, whether it's Copilot, they're all really, really interesting. But Notebook LM, I find really, really interesting. I use it a lot for looking at PDF documents of things like planning applications, that kind of thing. Fascinating stuff. So maybe load the Bitcoin white paper and use that product to interrogate it and write a podcast that you can listen, and it'll write an 8-minute video audio podcast of two people talking about it. So a great thing to finish on, folks. So this is where we're going. So some good predictions of 2025. So we're going to have to close off there. Say thank you, as always, as Elena says, thank you very much to everyone who contributed. For those who are watching, come and join us in future. I hope you enjoyed it. Have a great day, folks.
Thank you. Thank you, everybody.
And Happy New Year.
Happy New Year.
Yeah.
Bye now.